Will the Birkenstock company reap success in tough market conditions? Birkenstock is set to go public on the U.S. Stock Exchange, and for potential investors, what are the key things to keep in mind? Let's see. On October 10th, the German company Birkenstock Holding said it had priced its initial public offering in the United States at $46 per share, which was in the center of its stated price range. Despite sufficient demand to price the share sale at the top of the stated range of $44 to $49 a share, and given the market volatility, Birkenstock and its underwriters chose to price the offering conservatively, according to persons familiar with the situation. Following food delivery service Instacart, chip designer ARM Holdings, and marketing automation platform Klaviyo, Birkenstock is the fourth significant firm to announce a U.S. IPO in the previous 4 weeks. The company is valued at about $9.3 billion as a result of the IPO, which garnered approximately $1.48 billion based on the sale of 32.3 million shares. After a roughly 18-month dry period, the flurry of recent listings briefly fueled hopes of a widespread rebound in equities capital markets. The 3 newly listed businesses, nevertheless, lost the majority of their share price gains in the days after their initial public offerings, which casts doubt on the near-term outlook for new stock market listings. Instacart's stock is currently worth less than what it was when it went public, whereas shares of ARM and Klaviyo continue to trade above their IPO price. Johannes Birkenstock and his younger brother, Johann Adam Birkenstock, both shoemakers, established Birkenstock in the German village of Langenbergheim in 1774. After its foundation, the Birkenstock family operated the company for 6 generations. The company has been working to establish itself as a stylish brand with products worn by celebrities and models. In the film's climax scene, Barbie, played by Margot Robbie, wore a pink pair of Birkenstocks. The luxury goods conglomerate Louis Vuitton Moet Hennessy and French billionaire Bernard Arnault's L. Catterton private equity firm invested in Birkenstock in 2021, acquiring a controlling interest in the company. L. Catterton will own 82.8% of Birkenstock following the IPO, giving it the majority of the voting power for all of the company's existing shares. On October 11th, Birkenstock stock will begin trading on the New York Stock Exchange under the symbol BIRK. The principal underwriters for the IPO are Morgan Stanley, JP Morgan Chase, and Goldman Sachs. John Keaton, the founder and managing partner of Torch Capital, claims he has been recommending businesses to hold off on going public until at least the next year. Keaton advises contrasting an IPO like Birkenstock with other businesses in its industry, in this case, Stephen Madden or Nike. To evaluate the company's products, consider consumer opinion and behavior trends as well. For instance, are Birkenstock sandals still in style and demand? Can long-term consumer spending support the valuation? As a brand, corporation for fashion and positioning, Birkenstock has done incredibly well. Just where does that fit into the larger macro equation is the question. What sort of standards should investors in the public markets use if they are interested in these IPOs? For instance, how can you tell whether Birkenstocks are a good investment? For that, we need to compare Birkenstock with some other brands. The third largest footwear manufacturer after Nike and Deckers is Birkenstock, bigger than Crocs, Steve Madden, Skechers, and a plethora of other enormous businesses. In 2021, it was likewise given a value of $5 billion. Just where you think it falls on that line is one thing then. How are consumers feeling is the second factor. What direction do we think consumer behavior will take? Caden said that at Torch, they pay close attention to consumer behavior, not just where it is today, but also where it is headed. And he believes that it will become a very valuable firm in the long run. It has a lengthy history, is firmly established, and is a legitimate brand. However, it appears that consumer spending will also face difficulties. Recession has been discussed for the past 2 years. Although it hasn't happened yet, it doesn't imply it won't. And when you consider which items are necessities versus nice-to-haves, Birkenstocks fall into the latter category. And if individuals are cutting back, they might not make that kind of buy in the next year or two. Sandals made by Birkenstock can be spotted all over the place. When you consider the high and low fashion trend, sort of, something really fancy with something more basic, they've really nailed that. And you see folks in New York City out and about at really nice restaurants and clubs, still wearing a fancy dress or very nice attire with a pair of Birkenstocks. Thus, they have done exceptionally well in terms of brand recognition and positioning as a fashion company. Just where does that fit into the larger macro equation is the question. In this situation, investors do have options for the first time in a very long time. You can hide in a 5% earning money market fund or a T-bill. Does that alter the type of business we believe can go public today and attract investors from the public market? To this question, Jonathan Keaton has a positive answer. Investors need to constantly consider the risk-reward ratio. He said, and he does believe that if you play it too safe, you'll miss out on a lot of opportunities. But in this setting, there are genuine risks. As a result, Torch has instructed their companies to delay their initial public offerings. Based on the price that it is being sold at, you really need to have a sharp eye for what the genuine growth potential is. If a company is all clear to invest, what are the signs that tell you to go forward? The most important thing should be general market conditions because you can't swim upstream. Second, you should compare it with other decent IPOs in the same sector. Third is the positive cash flow. There is this venture and tech bubbles that have occurred in recent times. But how profitable are they? What is their actual cash flow? So, it comes down to the fundamentals. You must have faith in a compelling growth narrative. But after that, they must have some evidence supporting it and a much clearer path to follow than was necessary 2 or 3 years ago. In essence, all three of these things contribute to a successful IPO. Let's see what some other experts have to say about Birkenstock IPO. Investors may want to avoid the initial feeding frenzy when German sandal manufacturer Birkenstock launches its IPO, according to CNBC's Jim Cramer. In the end, Birkenstock has a great product, one that even found its way into the incredibly popular Barbie movie. But you need to be very careful with its stock after the IPO on Wednesday, Cramer said. I worry that it'll be too expensive right out of the gate and will only get more expensive in the initial feeding frenzy. Although Cramer cautioned against doing so, he added that Birkenstock is a particularly good example because the company doesn't need to underprice its shares to attract investors. Cramer questioned if the long-established sandal maker's current surge in popularity was just a fad or had real staying power. Nevertheless, he claimed that the business has had strong profitability and development, and that its margins appear to be moving in the right way. The majority of the company's shares, according to Cramer, are already spoken for, with big-ticket investors like a company connected to luxury goods giant LMVH and a Norwegian hedge fund reportedly acquiring about 42% of the shares that are up for sale. The bottom line is that Birkenstock has been successful as a brand and style company, but its position in the larger market equation is uncertain. That's all for now. For those who are planning for a long-term buy in Birkenstock, be patient and do your research to see how Birkenstock fits in the macro equations. Thanks for watching, and for more videos like this, subscribe to this channel.